Saturday, August 12th, 2017, Monaco 64, home of alternative economics and contrarian views. So I want to talk about gold, physical gold, of course, and also a bit about silver, but I'll focus on gold and how it's the ultimate protector against fiat money debasement, fiat money, the fraudulent fiat money central banking system we have. And I'll show it to you how it's protected savers in not only in the US, but also in the United Kingdom, in Canada and Australia in this last decade or so. I know a lot of people are doing very well with cryptocurrencies, but I still believe, the track record is thousands of years, and I'll stick to precious metals. Doesn't mean to say that I'm poo-pooing Bitcoin, but let's focus on precious metals, on gold, and I'm gonna have a look at gold in US dollars, which is the price most people around the world look at gold in, even here in the UK. But I'm also going to look at gold in British pounds, gold in Canadian dollars, and gold in Australian dollars. A lot of people, even in the UK and other countries, they say, oh, gold has done really badly. It went up to 1900 and now we're still at 1200. But, you'll be surprised to see what gold has done in other currencies. So first of all, I want to look at gold in US dollars and show you how it's doing really well, and how I think it's, in terms of fiat money price, it's actually starting to break out. Not that not that you should worry so much about the price. Personally, I think people should worry about having ounces of gold. Add on to the ounces you have, or grams, whatever you want to measure it in. But it's always interesting to look at how it's doing. So I'm looking here at this weekly chart of gold in US dollars going back to 2000. You can see the top in 2011 at 1920. And there's that trend line that a lot of people have been talking about. It's part of a pennant as well, which is a corrective formation within a trend. And as you can clearly see, the trend since 2000 has been from the bottom left-hand side of the chart to the top right-hand side. So what we've had since 2011 has been a correction. You can see we're now really starting to break out of that trend line. We're comfortably above it. And I've got some other lines here. They're moving averages. The black line is the 50-week moving average. The orange line or the yellow line is the 100-week. And the green line is the 200-week moving average. You can see now gold is above them and above all these moving averages in US dollar terms. The only thing that we want to see now is the 100-day, the yellow line moving average, move above the green. So, but it's looking good. We're comfortably above that trend line from the top in 2011 and the top in 2012. You can see it looks like we're very close to breaking out. We got to 1292 yesterday on Friday. We weren't able to break 1295, but we closed right around 1290. So we're very close to moving higher here. Of course, after the 1290, 1300, well, 1295, 1300 is the key level, and there's not much resistance after that until 1375, which was last year's high. So, yeah, this is in US dollars. Now I'm going to look at gold in British pound terms. Most of my biggest audience comes from the US, and then the UK, then Canada and Australia. So let's look at gold in British pounds. you can see that the high was 1194 back in 2011 when gold made a high in dollars at 1920, and the low was 1694 in 2016. The low was made more towards the middle of the year in British pounds, not like the price of gold in dollars at in December. It was 694, and since then, we've moved up quite well. We're right now, I think we closed around 991 yesterday. We got up to 995. So you can see as well the trend line for gold in US dollars, the similar line we had for the pound. We've broken out of it already. So we actually broken out in British pounds. There's also a teacup and handle that looks pretty bullish here. So the key levels now in British pounds is going to be 1,000 and then 1,064, which was the high last year just after Brexit. And as you can see here as well, we're comfortably above the moving averages as well. The 50-day, we're above that. And the 50 days above the 100-day and the 200-day moving average. So gold in British pounds is looking good. And I want to show you as well, compare the price of gold in British pounds and the price of gold in dollars going back 10 years. This is really interesting as well. So 10 years spot gold in British pounds versus US dollar. You can see in 2008, beginning of 2008, or probably, well, 10 years, so that would be August 2007, gold in British pounds was below both 400 pounds. So now we're almost at 1,000. So it's done really well in the last 10 years. You've 250% gain. And as you can see, even when gold was making that run to 1920 in US dollars, which is the blue line, gold in British pounds also went up. There's this fallacy that when gold goes up, it only goes up in US dollars, but it doesn't. Because in the end of the day, gold is the ultimate protector, as I said, against fiat money debasement. And the US dollar is a fiat currency, but so are all the other currencies, the national currencies, and they're based on the US dollar. So if anything, to think that when the dollar is going down, that you can hold other currencies as a hedge, I think it's a silly thing and an expensive exercise. I think gold is the ultimate protector, because you can see there, gold went from, around 750 in US dollars all the way to 1920, but it also went from 400 pounds to just under 1,000, from 400 pounds to almost 1,200 pounds at the same time. If anything, their gold actually did better in pounds when the dollar was going up. And I'm sorry, I said the dollar move was the blue line, but it's actually the red line. So in British pounds, gold did even better when gold was making, its bull run towards almost 2,000. So that's the British pound. Now let's look at the Canadian dollar. I've got a lot of Canadian viewers, so I want to do the Canadian dollar. So let's see. The high in the Canadian dollar was just about above 1900 as well. I think it was 1903 in 2011. And we corrected down, to around 1250. But now we're at around 1640, 1635. The moving averages are looking good as well. We've got the 50-week moving average above the 100-week and above the 200-week. And the price is above the 100 and the 200. And we're very near breaking above the 50-week moving average. And I want to show you also the chart of the Canadian dollar gold price compared to the US dollar gold price going back 10 years. And you can see there from August 07 to the high in 2011, basically the Canadian dollar in gold terms followed the US dollar, you know, pretty much very closely. So Canadian dollar is the blue line. We were trading around 700 in 2007, 10 years ago, and we got up to, yeah, just I think it was, yeah, 1903 in 2011. And now we're, you know, we haven't corrected as much. You can see there in 2014, gold has been outperforming in Canadian dollars to US dollars. So, yeah. So if the dollar goes down versus the Canadian dollar, or the dollar is going down generally, don't get rid of your gold. Keep your gold. So now I want to look at the XAU AUD, or the gold price in Aussie dollar, and you can see that we made a high. I think it was around 1835 in 2011. That's the same, around the same time the dollar made a high at 1920. But then last year, in the middle of the year, gold made a new all-time high in Aussie dollar at 1845. It does look like a double top, but technically we did go make a new high, and the moving averages are looking good. The only thing I want to say here is that the 50-week is kind of moving back below the 100-week. We'd like to see that reverse and stay above the 100-week, but it looks pretty good as well. And let's have a look as well at the comparison of the 10-year Aussie dollar gold price versus the US dollar. So Aussie dollar is the blue line. You can see 10 years ago we were around the same price in US and Aussie dollar for the ounce of gold. So it was $800. And and now in Aussie dollar, you know, we're at 1,600. We've gone up 100%. You know, it went up even when, you know, the dollar was going down against gold, or gold was going up against the dollar, which is that red line there. Even then, you know, I know that the Australian dollar is a currency based on natural resources a lot, and gold especially. But even then, you know, the gold was a good place to be in terms of Aussie dollar. You probably would have, you know, you could have been in US dollars, but you wouldn't have done as well, because gold also did well against Aussie dollars. So that's what I'm trying to say here. Yeah, a lot of people say that the dollar is going to collapse, but what is it going to collapse against? It's going to collapse against gold and silver, against real, you know, real things. Against the other currencies, it's not, it's might go down, but the other currencies are also going to go down. So what I'm trying to say here, if your currency is not the dollar, you know, your national currency, doesn't mean to say that you are, you know, off the hook. You need to be protected by the precious metals. Enjoyed this video? Like, share, subscribe to my channel if you haven't yet. And also you can follow me on steemit.com. You can follow me on Twitter at Maneko64. And I'll talk to you later. Take care. Bye.